Hey there, investors. Have you ever wondered how much money people made investing in 2023? Stick around, because I'm about to reveal some eye-opening numbers that will surely grab your attention. Welcome back to the channel, where today we're diving into the world of investing in 2024. I'll be sharing some valuable insights on how you can make money through smart investments this year, and why it's crucial for you to pay attention to this topic. Investing in 2024 can be a lucrative endeavor if done correctly. With the right knowledge and strategy, you can make big profits in the ever-changing world of finance. There are a few key tips to keep in mind when looking to make money through investing. First and foremost, it's important to do your research. Stay informed about current market trends, economic indicators, and industry news. This will help you make informed decisions about where to put your money. Keep an eye on the stock market, cryptocurrency trends, and emerging industries that show promise for growth. Diversification is another key strategy for successful investing. By spreading your investments across different asset classes, industries, and geographic regions, you can reduce risk and increase the likelihood of positive returns. Consider investing in a mix of stocks, bonds, real estate, and other assets to create a well-rounded portfolio. Timing is also crucial when it comes to investing. While it's impossible to predict the market with certainty, paying attention to market cycles and trends can help you make strategic investment decisions. Consider buying low and selling high, and avoid making emotional decisions based on short-term market fluctuations. In addition to traditional investments, consider alternative investment opportunities for potential high returns. This could include investing in startups, peer-to-peer lending platforms, or real estate crowdfunding. These alternative investments can offer unique opportunities for growth and diversification. Risk management is another important aspect of successful investing. While it's natural to want to chase high returns, it's important to balance risk and reward. Consider your risk tolerance and investment goals when making decisions about where to put your money. Diversification and asset allocation can help mitigate risk and protect your investments. Investing can be a powerful way to grow your wealth and achieve financial independence. As we head into 2024, here are some easy tips to help you make money through investing and potentially achieve big profits. 1. Understand your investment goals. Set clear objectives. Define what you want to achieve with your investments. Are you looking for short-term gains, long-term growth, or passive income? Clear goals will guide your investment strategy. Determine your risk tolerance. Assess how much risk you're comfortable with. Your risk tolerance will influence your choice of investments, from conservative bonds to aggressive stocks. 2. Diversify your portfolio. Spread risk. Diversification involves spreading your investments across different asset classes, stocks, bonds, real estate, etc., to reduce risk. This way, if one investment performs poorly, others may perform well, balancing your overall returns. Consider index funds and ETFs. Invest in low-cost index funds or exchange-traded funds, ETFs, that track a broad market index. These funds provide instant diversification and have lower fees compared to actively managed funds. 3. Invest in stocks. Blue chip stocks. Invest in established companies with a history of strong performance, known as blue chip stocks. These companies are generally more stable and offer steady growth. Growth stocks. Look for companies with high growth potential. While these stocks can be more volatile, they offer the potential for significant returns if the companies succeed. Dividend stocks. Consider stocks that pay regular dividends. Dividend stocks provide a steady income stream and can be reinvested to compound your returns over time. 4. Explore real estate investments. REITs. Real estate investment trusts, REITs, allow you to invest in real estate without owning physical property. REITs often pay high dividends and provide exposure to the real estate market. Rental properties. If you have the capital, consider investing in rental properties. Rental income can provide a steady cash flow, and property values tend to appreciate over time. 5. Utilize Robo-Advisor's automated investing. Robo-Advisors are online platforms that use algorithms to manage your investments based on your goals and risk tolerance. They offer low fees and require minimal effort on your part. Regular rebalancing. Robo-advisors automatically rebalance your portfolio to maintain your desired asset allocation, ensuring your investments stay aligned with your goals. 6. Stay informed and educated. Financial news and analysis. Keep up with financial news and market trends. Understanding the economic environment helps you make informed investment decisions. Investment courses and books. Invest in your financial education by taking online courses or reading books on investing. The more knowledge you have, the better equipped you are to make smart investment choices. 7. Leverage tax-advantaged accounts, retirement accounts. Maximize contributions to tax-advantaged retirement accounts like 401ks and IRAs. These accounts offer tax benefits that can boost your long-term returns. Health savings accounts, HSAs, if eligible, contribute to an HSA. HSAs offer triple tax benefits. Contributions are tax-deductible, growth is tax-free, and withdrawals for qualified medical expenses are tax-free. 8. Consider alternative investments. Cryptocurrencies. If you're comfortable with higher risk, consider investing a small portion of your portfolio in cryptocurrencies. Cryptos can be highly volatile, but have the potential for substantial returns. Precious metals. Invest in precious metals like gold and silver. These assets can act as a hedge against inflation and market volatility. Peer-to-peer lending. Platforms like Lending Club or Prosper allow you to lend money to individuals or small businesses in exchange for interest payments. This can be a way to earn higher returns than traditional savings accounts. 9. Practice dollar cost averaging. Consistent investing. Dollar cost averaging involves investing a fixed amount of money at regular intervals, regardless of market conditions. This strategy reduces the impact of market volatility and lowers the average cost of your investments over time. Automatic contributions. Set up automatic contributions to your investment accounts. This ensures you consistently invest and take advantage of dollar cost averaging. 10. Monitor and adjust your portfolio. Regular reviews. Periodically review your portfolio to ensure it aligns with your goals and risk tolerance. Make adjustments as necessary based on your financial situation and market conditions. Finally, consider seeking professional advice when it comes to investing. A financial advisor can help you create a personalized investment strategy based on your goals, risk tolerance, and financial situation. In conclusion, investing in 2024 can be a profitable endeavor with the right knowledge and strategy. By staying informed, diversifying your investments, timing the market strategically, exploring alternative investment opportunities, managing risk, and seeking professional advice, you can increase your chances of making big profits through investing. Keep these tips in mind as you navigate the world of finance and work towards building wealth for the future. If you find value in this video, please like, share, and subscribe to the channel to get more information on financial freedom and wealth management. There are 2 videos that I prepared for you. These videos will add more value to your life. Click on one of these and watch to improve your wealth mindset.